These are new markers, no? Praveen, new markers, no? Okay, friends, now we'll continue. Ready? Ready to sleep? Because you must have had a good breakfast. Had your breakfast, no? Sure? Okay. See, Indian income, foreign income. The discussion is over. We were going to discuss about deemed to accrue or arise in India. Deemed to accrue or arise in India. Section number 9. See, if the income is covered under section number 9. Section number 9. If the income is covered by section number 9, there are few incomes which I am going to write now. Okay. If you see any of these incomes, you will say that these incomes are deemed to accrue or arise in India. Meaning that these incomes are also treated as Indian income. These incomes are also treated as will be taxable irrespective of your residential status. Tick, tick and tick. Understanding? Now pay attention. The first income is any income which is through or from any business connection in India. Number 2, any property or asset or source of income situated outside India or through or from transfer of any capital asset which is situated in India. So these are absolutely 3 incomes. If you see 3 different incomes. So if any income is there which is from business connection in India, deemed to accrue or arise in India. Or if you are earning any income from any asset, from any property or from any source of income which is situated in India. Where is the asset? In India. Where is the property? In India. Where is the source of income? In India. From this property, from this asset, from this source of income which is there in India, from this asset or property or source of income, if you are earning the income, yes or no? Even that income is also deemed to accrue or arise in India, yes or no? Or if you are earning income by transferring the capital asset, but that capital asset was situated in India, hello, then also that income will be treated as Indian income, deemed to accrue or arise in India. Number 1, any income which is through or from any business connection in India or property asset or source of income situated, sorry, it is not outside India, it is situated in India. My mistake, I wrote wrongly. Okay, no? So, source of income situated in India or Any income which is coming from transfer of any which is situated in. Okay, no? So one or two examples if I will give you will understand. Simple. See, these incomes are actually, you might be earning these income sitting outside India. Where are you? Consider yourself that you are an assessee. Okay? Try to imagine that you are an assessee, you are sitting outside India. For example, you are sitting in Dubai. Hello? Or you are sitting in Germany. Wherever you are, but you are sitting outside India. Sitting there only, you are earning some income. Sitting there only, you are earning some income. You are receiving that income also outside India. But the income which you are earning outside India, receiving outside India, is coming to you from a business connection which you had in India. So you cannot go and tell the government of India, that see, I am a non-resident. Or my status is RNOR. See, I am sitting outside India. I am earning income outside India. I am receiving that income also outside India. Hence, this is my foreign income. And based on my residential status, this foreign income will not be taxable for me. What the government will say, even if you are sitting outside India, even if you are receiving that income outside India, sitting outside India, earning income outside India, receiving that income outside India, but bloody your income which you are receiving there, earning there, is coming from a business connection in India. That business connection in India, because of that you are earning that income. Irrespective of your residential status, we want to charge tax on that income. That is possible only if we deem that income as if it is accrued in India. Otherwise, everyone will start doing it, no? Hello. One example I'll give. There is a agent in India. Agent means you have a business connection in India. So just like agent, you might have some branch in India. You might have some factory in India. Yes or no? So if you have any branch, any subsidiary or any agent in India, but are you yourself in India? No, you are outside India. Yes or no? So you are outside India. What is your business? What is your business? You are selling cars. You are selling? Where are you selling the cars? Outside India. Sale is happening outside India. Your stock of the cars you are selling outside India. Customers are going to give you money outside India. Yes or no? So out of all the customers whom you are selling the cars outside India, few customers are sent through that agent who was situated in India. That agent is also giving you some customers outside India to whom you are selling the car. Possible or not? So your entire income by selling the cars will not be your Indian income, but at least to the extent of that income which you are earning through this agent has to be treated as your Indian income. Yes or no? Now see, you are in Germany. Okay, you are in Germany. In Germany, you have a manufacturing of what? Cars. This manufactured cars will be sold. Where are you selling? Where the sale is happening? Outside India. Now by selling, you will earn what? Income. That income is coming in your control for the first time in Germany also. Germany only. Meaning, this income is received also. By selling the cars in Germany, if you are earning some income, that income you are receiving there only, can I say, actually This is accrued and received outside India. Hello? But the car which you are manufacturing there, no? The car which you are manufacturing there, one component of one car. This car will be made up with many components. Like steering wheel will be there, seats will be there, engines will be there, some parts will be there, right? No? So one of the components of this car is manufactured in an Indian factory. Now what this Indian factory is doing? Manufacturing this component. Hello? Now this component will be sent to and will be, while manufacturing this car in the Germany, this component will be assembled in the car. Tell me yes or no. Now being a car seller, will you recover the sale price of the car? Being a car seller, will you recover the sale price of the car? But don't you think that in the sale price, you will recover some amount for this component also, no? Which is getting manufactured in India. So to that extent of your income, not your entire sale income, but to that extent of your income by selling the car, which relates to this component, how can we consider that this income is also your foreign income? That income which you are earning there, out of that income, some income you are earning by selling this component as a part of your car also, no? That income which you are earning outside India, out of that, whatever income which relates to your business connection in India will be deemed to accrue or arise in India. Factory is what? Your business connection in India. Because of this business connection in India, components are made. Those components are assembled in your car. And now along with the entire car, this component is sold. So whatever income, by selling the entire car, out of that income, some income which relates to, which pertains to this connection cannot be treated as your foreign income. It has to be your Indian income. For example, there was an agent in India. This agent in India is giving clients or customers. These clients or customers are buying the manufactured cars. Top end cars and all. Very expensive cars are there. These luxury cars and top end cars, they are not manufactured in India. If somebody from India, a very rich guy, if he wants to buy those cars, what he will have to do? He will import through this agent only, no? This agent will arrange the cars from this company. This company will sell its car to Indian customer. Hello? Sale and everything will happen over there. Money will be received there. So this company will say that, see, we are a non-resident company. We are making a sale outside India. Sitting in Germany, we are selling the car. Customer is coming to us. Hello? Taking the test drive and everything. But bloody, to that Indian customer, if you are selling the car, you are selling it through this business connection in India, no? How can we consider that as your foreign income? It has to be your Indian income. And hence, in section number 9, they are saying that any income which is earned outside India, received outside India by a non-resident or RNOR. Hello, by a non-resident or RNOR. But that non-resident or RNOR is earning that income outside India, receiving that income outside India through a business connection in India. So that income will be deemed to accrue or arise in India. Will you remember this? Sure, sir. Paka. Okay. Now tell me one thing. In the case of ROR, no. In the case of there is no point of deeming anything. Why? Because for him, whether you consider that income as Indian income or foreign income, it will not make any difference because his global income is taxable for him. Hello. So don't you think this section number 9 is not made for taxing the incomes in the hands of ROR? This section number 9 is made for taxing the incomes in the hands of RNOR or NR. Got it? No? Now tell me, if actually the income gets accrued in India or actually the income gets received in India, then also there is no point of deeming that income. Irrespective of your residential status, whether you are ROR, RNOR, NR, if actually the income is earned in India, accrued in India or received actually in India, then there is no point of deeming it. Why we are deeming it? Because this income you are earning outside India, receiving outside India. There are bright chances that you will try to call this income as your foreign income. And your status might be RNOR or NR, and you might be trying to call this income as your foreign income, and you might not pay tax on these incomes. How the hell we don't take tax from you on such income which you are earning outside India from a business connection in India, from a property, from an asset, from a source of income which is situated in India? For example, this example you understood, no? Hello, sir? Business connection. I'm giving you the example for the second point now. Second point. See, I am in Dubai. Santosh is also in Dubai. So myself and Santosh, we both are friends. And we both are in Dubai. Now, Santosh is settled in Dubai, but Santosh's entire family, his parents, wife, and children, they are staying in India. They are staying in some rented flat, rented premises. Now the landlord, the owner of that premises, is telling his family to vacate the premises. Hello? So Santosh's father called him that, Santosh, the tenant is saying to vacate the property. The owner, landlord is saying to vacate the property. We'll have to find out another house. Where? India only. Hello? Santosh is sitting in Dubai. His father is calling him from India. Understand? His father is in India. His father is saying that we are staying in India in a flat which the landlord wants us to vacate. So now, Santosh got this news. Myself and Santosh met in the same, met on the same evening. Santosh and myself, we both are friends. Santosh is sharing that information with me. That Umang sir, today my appa called me. He was saying that the place where my appa and my family stays now, in Chennai, the landlord wants my appa to vacate the premises within 1 month. So within 1 month, I would require my parents, my family to shift to another house in Chennai. Sir, you have any contacts in Chennai? I'll say, why are you worrying? Macha, I myself have a property in Chennai. I myself have a property in. Do one thing. I will arrange the keys and everything. Tell your family to shift to my house. Sitting here in Dubai itself, I have rented my house in Chennai. Tell me, where is my property? Outside India? In India. Where is my asset? Where is my source of income? But sitting in Dubai only, I have given that flat on rent to Santosh. I have entered into a rent agreement with him, telling him that this much amount you pay me as a rent here only in Dubai, and let your family stay there. Where did I earn my income? Dubai. Where did I receive that income? And my residential status is non-resident. Will I pay any tax on that? I will have to. Why? Because the income which I am earning outside India, receiving outside India, is from an asset or a property or a source of income which was situated in India. Got it, sir? Everyone? Easy or difficult? Easy, very easy. Okay, no? Now pay attention. Santosh wants to buy that house. Instead of taking that house on rent, Santosh wants to buy that house. Where is my house? Meaning house is a capital asset. Ayo, for me, my house which is situated in Chennai is my capital asset. Hello? Or a land will be there in India. A land is there, a piece of land which I am owning in India is my capital asset, no? But where am I? Where is Santosh? We enter into a sale agreement in Dubai only. I am selling my property to him, sitting there only. Taking the entire sale consideration in Dubai only. I have earned income sitting outside India. Received that income outside India. My residential status? No. I will say that I will not pay tax on this income. Will the government agree to this? Bloody everyone will start selling their properties like this, no? Hello? Hence, income through or from transfer of what? Any capital asset which is situated in India will also be deemed to accrue or arise in India. I cannot say that it is my foreign income. Section number 9 deems this income as a foreign income. Getting my point? All these incomes, no? All these incomes earned outside India, received outside India, and by any RNOR or NR, these incomes are earned. So in their hands, to tax the income in their hands as Indian income, there was a requirement to bring all these incomes under section 9, deeming them as if they are accruing or arising from India only. Understanding? Hello? You have finished 3 incomes. Number 1, business connection in India. Number 2, asset, property or source of income in India. Number 3, transfer of a capital asset situated in any income which you are earning out of all these 3 will be deemed to accrue or arise in India. It will be treated as your Indian income. Okay? Tick, tick, tick. Whatever may be your residential status, ROR, RNO, RNR, these are going to be taxed in your hands. Understood? Should I move on to the 4th income? Now the 4th income. This is 1, 2, 3. Now 4th. Salary. What did I write? Salary. I am earning that salary outside India. Receiving also that salary, still that salary will be deemed to accrue or arise in India. If that salary is for my services which are rendered in India, then definitely it has to be covered under section number 9. Understanding? Hello? See, if the services are rendered in India, services are rendered in and salary received in India or outside India. If it is received in India, no? Hello? Services are rendered in India. And for that services, salary is also received. There is no need to deem, no? There is no need to deem. It is what type of income? Indian income. Hello, sir. Tick. Understood? Where am I rendering the services? For that services only, I am getting the salary. So if for that services, if I am getting the salary, so the place where I will be rendering my services as an employee. I am an employee, I am rendering my services to my employer in India, and for those services, if I am getting the salary, how can that salary bloody be treated as a foreign income? That can never be treated as a foreign income, because the services for which that salary becomes due and I am earning that salary, that services are being rendered in India. Understanding? So where the services are rendered? In India. Accruing in India. Hello. And received also in. Definitely this is a normal Indian income. No need to deem also. But what if I have rendered my services in India to my employer, and for that rendering those services in India, I might be paid salary outside India also. Possible or not? And this happens in the case of all the multinational big companies. Have you heard about Microsoft, Oracle, Google, Meta? These are all multinational companies. Now, for example, I am the employee of Google. Google is in USA. I am a US citizen. I am also a US citizen. I am employed in Google office in USA. Where is my employer? USA. Where have I entered in the employment contract? USA. Where my employer is giving me salary? USA. So I should be rendering the services in USA, no? But what the Google is doing? Google is having a project in, and I am employed in that project in India. From there, for my employer, I am coming to India. As an employee, I am rendering my services to my foreign employer in India, and for that, if he is giving me any services which are rendered in India, and for that, if any salary becomes due by any employer anywhere in the world, how can bloody we treat that as your foreign income? Hello, sir. Even if you receive that salary outside India, we are not going to cover that as your foreign income. This will be covered under section number 9, deemed to accrue arise in India. Understood? Hello, sir. If you receive it in India, then there is no need to deem also. But if you receive it, you might tell the Indian government, no, that see government, I am a foreign employee of a foreign company. My company is in USA. I have employed in, I have taken up my employment in, I have entered into an employment contract with my employer in, employer-employee relationship is in USA. Bullshit. If all such things are in USA, you are getting salary also in USA, render your services in USA, no? Why are you coming to India? To render your services? And if you'll come to India to render your services, and for that services, if you are going to get salary, even if you are going to get salary from your foreign employer outside India, but the services are rendered in India, we cannot count that income as your foreign income. It has to be your Indian income. Hence, section number 9. Will you remember this? Everyone? Sure, no? What if the services are rendered outside India? And for the services which you have rendered outside India, the salary is received in India, or it may be received outside India also. This is the entire crux. Here the fifth income will also be covered. Tell me, are you an employee? Hello? Yes, sir. Where is your employer? No matter wherever your employer is. At the time of checking the salary, taxability of salary, you are not going to see where your employer is. Where you have entered into employment contract. All such information is bullshit. You always see where you are rendering your services as an employee. Are you rendering your services in India or outside India? So whatever services which you will render outside India, for that if you are getting any salary, can I say that salary is accrued outside India? Services are rendered. For those services, if the salary is getting generated, can I say that salary is getting generated from? Accrued. Accrued. But received. Which income? Indian income. No need to deem also. Tick, tick, tick. Even though the service is rendered outside India, meaning the salary for this services is accruing outside India, but since you have received that salary in, this has to be your Indian. No need to deem also. Got it? No, sir. But now tell me, what if the services are rendered outside India, meaning the salary is accrued and received also? Accrued, received, accrued, received, both happening outside India. What type of income this is? Foreign income. A or B? B. Tick, cross, cross. This should happen. Yes or no? But here there is one exception. Here there is one. Salary for services rendered is received by an Indian citizen from the government of India. Hello? So even if it is accrued outside India, even if it is received outside India, but since it is received by an Indian citizen from this will also be covered by section number 9. This is your fifth income. Fourth was that and fifth is this. Will you remember this? Hello? But if the salary is accruing outside India for services rendered outside India, it is received also outside India by any other person in any other case, it will be your foreign income. Part A or part B? Part B. Tick, cross, cross. Will you remember this? Sure? Sure, no? Copy that chart. First one. Copy this chart also. Do it fast, huh? Done. For salary, you will see place of rendering the services. Place of rendering the, if the place of rendering the services is in, place of rendering the services is in, that salary can never become foreign income. That will always become Indian income. If it is received in India, then no need to deem also. But if it is received outside India, then it will be covered by section 9. By deeming it, it will become your Indian income. Yes or no? But if the salary is for rendering your services outside India, even that can become Indian income, provided it is received in India, or it is covered by point number 5. Even if it is received outside India for rendering services outside India, even if the salary is received in India, outside India. So services rendered outside India. For those services, salary also received outside India. That salary can also be treated as your Indian income, provided it is coming from government and received by an Indian citizen. In that case, it will be treated as deemed to accrue or arise in India. Yes or no? In every other case, for all the other employees, you are some other employee rendering services outside India, receiving salary outside India, accrued outside India, received outside India. It is your foreign income, part B foreign income. Yes or no? Everyone, will you remember this? Should I move ahead? So 5 incomes we have covered. One by one, you will repeat with me. Okay? First one, income through or from any business connection in India. Second, income through or from any property, asset, source of income situated in. Again, income through or from transfer of any capital asset which is situated in. See, if you receive all these incomes in India, no need to deem also, no. Hello, sir. What is the reason why we are deeming it? Because you are actually sitting outside India, earning these incomes outside India, and also you might be receiving these incomes outside India. Hence, we need to deem them as your Indian incomes under section 9. Next one, salary for services rendered in India, received outside India. Even if it is received outside India, will be deemed to accrue or arise in India. But if it is received in India, no need to deem also, no? Hello, sir. What if the salary is received for services rendered outside India? And if that salary is received also by an Indian citizen from the government, then in that case also that salary will be deemed to accrue or arise in India. Hello, sir. Yes or no? Now, who are these employees? Government employees who are deputed on assignments outside India, like Indian embassies in foreign countries, ambassadors and all. Yes or no? Foreign diplomats of Indian country. So, Indian embassy will be there in Canada. So, you are deputed as an ambassador or a foreign diplomat in Indian embassy, Indian High Commission in Canada. So, are you going to give your services to your employer? Who is your employer? Government. Government is your employer. Are you rendering your services to the government in Canada? Sitting outside India, you are rendering your services, and for that the government will pay you salary there only. Hello? Always deemed to accrue or arise in India. Will you remember? Now, to these kind of employees, the government will pay foreign perquisites and allowances also. In foreign country, if you will go to foreign country working for the government, so for your services which you are rendering outside India, for your services you are going to get salary also, but along with salary the government might give you perquisites and allowances also there. They are known as foreign perquisites, foreign allowances. Who is getting this? This Indian citizen. From this Indian citizen is getting from the government salary also. That is going to be taxable, fully taxable, because it is Indian income. But along with that, they are going to get foreign allowances and perquisites also, no? Under section 10, subsection 7, it is fully exempt. Since this income itself is exempt, even though it will be Indian income, but the government does not want to charge tax on this amount. The government does not want to charge tax on entire salary. Only those allowances and perquisites. Those will be fully exempt. Cars will be provided over there. Accommodation, etc. will be provided over there. Yes or no? So the value of those cars, accommodation, servants, etc. will not be treated as your taxable salary, because under section 10, subsection 7, that is fully exempt. Will you remember this? Sure, everyone. So these were 5 incomes. Okay. Now the 6th income which I am going to tell you. 6th income is dividend income. Dividend on shares. Shares of which company? Shares of 2 companies can be there. Shares of Indian company can be there. Hello? And the shares of foreign company can also be there. So, on the shares of Indian company, on the shares of, where is the company? India. So, where are the shares located? India. If the company is in India, so the shares of that company will be located in India. Getting my point, everyone? So on the shares of that Indian company, whatever dividend is getting generated, it is getting generated from, accruing from, and this is received also in no need to deem also. If it is received in India, then definitely it has to be your Indian income. No need to deem, take and, getting my point. But what if the shares of this Indian company, you are a foreign investor sitting outside India, you have bought those shares. Have you come to India? No. Sitting outside India only, you have bought those shares. And are you coming to India to get that dividend? That dividend directly gets credited in your account. That Indian company has made arrangements so that the dividend gets directly credited in your bank account in outside India. Yes or no? Meaning the dividend income is coming in your control for the first time outside India only. You are sitting outside India, you might have invested in those shares of Indian company, and outside India only, the income is coming in your control for the first time. And bloody you are a non-resident or RNOR. You will say that this income is my foreign income. I am not going to pay any tax. Just imagine, will the government like this? Even if the dividend on the shares is received, we are not going to consider this income as your foreign income. We want tax on this income also. Hence, it is covered by section number 9. This will also become your Indian income. This will also become your take and take. Will you remember this? Hello, sir. Now, what if the dividend is coming on the shares of? Dividend is coming on the shares of. And if it is received, come on, tell me, in? So even if it is getting accrued outside India, but since it is, what type of income it is? Indian income. What type of income? Indian income. By reason of its receipt in India. Yes or no? Now if it is received, then in that case it will be treated as foreign income. What foreign income? A or B? B. Tick, cross, cross. Will you remember this? This was your, actually I was supposed to tell you this only. Hello? But I elaborated the entire thing so that you come to know that in the examination, no, they'll fool you. They're not going to give you direct cases. Sometimes they will give you this case. Sometimes they will give you this case. Or sometimes they might also give you this case. In every case, what should be your answer? You might be aware. You must have to be aware about these things. Section number 9 specifically talks about this thing only. Hello? But with this, if we cover all the possibilities, then it is good for us only, no? At one place only, we know everything. Getting my point? Hello, sir. Sixth income is done. Sixth income is done. Now let's come to the seventh income. If you'll understand the seventh income, no? Trust me, 8, 9 will become easy for you. 8 and 9 will become easy for you. Now whatever I will tell you now, you will imagine that. Become an assessee first. Who are you? Who are you? Assessee. Okay? Assessee. You are earning what income? What type of income you are receiving? Interest income you are receiving. You can be any person. Whatever may be your residential status, I don't want to know who are you. You are an individual, you are HUF, you are company, you are firm, whoever you are. I don't care. But you are an assessee. What is your residential status? What is your residential status? You can have any residential status. I am not concerned about your residential. But are you an assessee? Assessee? Are you earning interest income? Now this interest income is coming from, government. Meaning, just imagine, government is giving you interest. Which government? It can be central government, it can be state government, it can be government, any government, yes or no? Government is giving you? Government is giving you? Why the bloody hell the government will give you interest? Simple, no? Keep it simple. You must have given your money to the, and the government is using your, which government? Which government? Indian government, no? Central or? Will be using the money outside India. It will be assumed as if your money is being used in, and for the use of your money, you are going to get interest. So can I say interest income is nothing but it is an income for use of your money. Your money getting used, and for the use of your money, whatever returns you get, that is interest. So you might have given your money to the government. Government take the money. Government might issue bonds. Government might issue securities. Or the government might have taken the money from you as a loan. In all the possibilities, the government is taking your money. Taking a loan from you. Yes or no? And by taking that loan from you, by taking that money, using that, for that use the government is paying you interest. Always, always, always deemed to accrue or arise in India. You are not going to ask the government, that government, where you are using my money. If you are using my money in India, then the interest for that use will be Indian income, because the money is being used in India. What if the government uses that money outside India? Then you will say, no, government, you have used my money outside India. My money which is being used outside India, for that if I am getting interest, it is accrued from, no, you cannot say that. You have no rights to ask the government that where your money is being used, for which you are going to get the interest. It will always, 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 always and always deemed to accrue or arise in India. Will you remember this? Hello? Why this collaborative? Interest is given to you by the government. Interest is given to you by the, and now this interest is received. Where? Tell me. In India? Or it can be received outside India? Irrespective of the fact that it is received outside India, still it will be taxable as Indian income, section number 9. See, if it is received in India, no, then there is no point of deeming it. Why? Because by receiving this interest in India, it has automatically become your Indian income. Hello? Automatically becoming your Indian income. But you must be a non-resident, because from many foreign multinationals, big, huge foreign companies, the government might be taking loans. Getting my point? Metro project is going on in Chennai. Going on, na? Some Japanese company is doing that work along with Tamil Nadu government. So Tamil Nadu government and that Japanese company both are collaborating for this metro project. Both have decided that some amount will be invested by Tamil Nadu government and some amount will be invested by Japanese company, and the technology and everything will be brought by Japanese company. Getting my point? MOU is signed. In that MOU, the Tamil Nadu government is saying that we are going to invest 5,000 crores. Hello? But some unfortunate event happened. For relief and everything, the Tamil Nadu government had to spend that money for that relief work and all, to meet some contingency. Now there is no money left to be used for metro project. So now the metro project will stop, no, it will halt, no. But the government does not want that thing to happen. Now the government We'll have a talk with this Japanese company. See, we were supposed to invest 5,000 crores, no? We are not having that enough funds right now because we have used that money in some contingencies in the state. So do one thing, that 5,000 crores which we were supposed to invest in the metro project, you only, Japanese company, you only invest that money in the project. Tamil Nadu government will consider that amount as a loan from you and will pay interest. Who is getting interest? Japanese company. From in India or outside India? The Japanese company cannot say that we are non-resident, this is my foreign income, we are not going to pay tax. You have to pay tax on that. Because that Japanese company earning that interest income, even if it is received outside India, is it coming from the government? Deemed to accrue or arise in India. Yes or no? What type of income? Indian income. But if it is received in India, then there is no point of deeming also, no? Got it, sir? Hello. So anytime, if the interest is coming from the government, close your eyes and say, deemed to accrue or arise in India. That's it. Got it, sir? Hello, sir? Now next one. Can the interest come from any other person? Meaning non-government entities, etc. You are an assessee, no? Hello? Will you always give your money to the government? Or you can give your money to others also? So now, the others to whom you have given your money to use. Now these persons will pay you interest, no? Assessee, are you getting interest from government or other persons? Are you going to get interest from government or other persons? Now this other person who is going to give you interest, payer. I'm not talking about the assessee. I'm not talking about you. I'm talking about the person who is giving you interest. If that person is resident, if that person is, so interest is coming to you from a, yes or no? Or the interest can come to you from a non-resident also, no? Possible, not possible, tell me. Now let's explore the first possibility, okay, no? Are you an assessee? Earning interest from whom? So resident is giving you interest. Resident is giving you. And now this interest which the resident is giving you is received in India. Or it can be received outside India also. Now tell me, if you are receiving interest in India, why the bloody hell we will deem it? It is apparent that it is your Indian income because you are receiving it in India. Is it your Indian income? No need to deem also. But what if you are earning this outside India, receiving this outside India? Possible or not possible? See, I am a big investor, high net worth individual. Where am I? Outside India. You are a resident. Sorry, first of all, let's take the example. You are the assessee, no? Hello. You are the assessee. You are outside India. High net worth individual. You have huge amount of money. I am a poor resident. I'm coming to you. Anna, Akka, please give me some funds. Resident coming to you, asking for funds, meaning loan. So you are kind. You gave me the loan. Who has taken the loan from you? Who has taken the loan? Resident from the assessee. Now this resident who has taken the loan from you is going to give you interest also. Hello? That interest is received by you in India. It is your Indian income. But where were you? Where were you? This resident is coming outside India and giving you interest outside India. Hello? Resident is coming to you and giving you interest outside India. Have you received your interest outside India? Yes or no? From on that loan which the resident has taken from you. Now check where this loan was used by the resident. Resident has used that loan. Definitely he is a resident. He must have used that loan. So where your money was used? In India. Yes or no? On that money, if the resident is coming and giving you interest, even if you are receiving that, deemed to accrue or arise in India. Section number 9. If it is coming from resident. If it is coming from, always deemed to accrue or arise in. Always deemed to accrue or arise in. Only one small exception. Only one. Resident has taken the loan from you. Is it necessary that the resident will always use this loan in India? Majority of the time it will be used in. But what if this resident has used your money for any business, for any profession, for any source of income outside India? You are an assessee, no? You have given me loan. I am a. And by taking the money from you, by taking that loan from you, that loan is used by this resident for any business outside India, for any profession outside India, for any source of income outside India. Then in that case, it will not be deemed to accrue or arise in India, even if it is coming from a resident. Understanding? Hello? So now, resident, hello? Resident, here, what I will do, please check. Resident, use loan. Resident, use the loan in India or outside India. You become an assessee. Huh? This is very important point which I am going to discuss. I am discussing with you. You become an assessee. Are you an assessee? I am a resident. I have taken a loan from you. So resident has taken a loan from you. Usually, whenever the resident will give you interest, no, it will be deemed to accrue or arise in India. It will be deemed to accrue or arise in India. But there is one exception. There is one. Resident has taken a loan from you. Resident has taken a loan from you, and that loan which he has taken is used by him on any business or profession or source of income which was outside India. In this case, section number 9 will not be applicable. It is not deemed to accrue or arise in India. It is accrued from outside India. It is accrued from outside India, because your money used by resident where outside India, on that money if the interest is coming, that interest will not be deemed to accrue or arise in. That is accrued from outside India. Yes or no? So will it be covered by section 9? No. It is deemed to accrue or arise in India? No. This is accrued outside India. This is accrued. This is accrued. Now see where it is received. If it is received in India, so even if it was not deemed to accrue or arise, but since it was received in India, it will become Indian income. Where the money was used? So not deemed to accrue or arise in India, accrued outside India only. But since you have received that interest in India, it will become your Indian income. But what if it was received? What if it was received? Now tell me, where the money was used? Where the interest is received by you? Is it your Indian income or a foreign income? Part A or part B? Part B. Tick, cross, cross. Did you understand? Everyone. First point. Please pay attention. See, if interest income is earned by assessee, become an assessee and think. Interest income is earned by assessee. And that interest is coming from? And you are receiving that interest in? No need to deem. Indian income, tick, tick, tick. Hello, sir. What if the interest coming from the government and that interest you are receiving outside India? Since it was received from the government, no, it is deemed to accrue or arise in India. You are not going to see where the money given by you to the government was used. It is always deemed to accrue or arise in India. Now it is deemed to accrue or arise in India. So whether you receive that interest in India or outside India, it is always your Indian income. Here it is your normal Indian income. Here it is deemed to accrue or arise in India. Yes or no? If it is coming from government, no, Indian income, take. Forget about this. What if the interest is coming from other persons? And that person is? So that resident is giving you that interest on the money which the resident has taken from you. Hello? And if the resident is giving you that interest, it is usually deemed to accrue or arise in India. It is usually deemed to accrue or arise in India. But there is one exception. If the resident has taken money from you and used that money outside India for any business, for any profession or any source of income, outside India. My business is outside India. My profession is outside India. My source of income is outside India. For that business, for that profession, for that source of income, I have used the money which I have taken as loan. And on that money, if you are getting interest, will not be deemed to accrue or arise in India. Even if it is coming from resident, it will not be deemed to accrue or arise in. It is accrued outside. It is accrued. So the interest income which is accrued outside India, if you receive that income in, it will be your Indian income. Even if it is accrued outside India, but since you are receiving it in, it will become your understanding. But what if that interest you have received outside India, accrued outside India, received foreign income, part A or part B? Part B. Because the amount of money the loan is used outside India, it cannot be deemed to accrue or arise in India. Yes or no? This is the exception to section 9. And since it was not received in India also, no? Hello? Hence it cannot be treated as Indian income. Now in this case, even if it is coming from resident, it will be foreign income part B. Will you remember? Tick, cross, cross. If you are ROR, only then this income will be taxable for you. If you are RNOR or NR, then this income will not be taxable for you. Will you remember this? Sure, sir. Now tell me, in every other case, what did I say? In every other case, if the interest is given by a resident, no, it will be deemed to accrue or arise in India. Now tell me, what is the other case? Resident has taken a loan from you. If he has not used that loan outside India, definitely he might have used that loan in. So where the loan was used? Where the loan was used? In India, no? On that, if he is giving you interest, where the interest is getting accrued from? And if that interest is received also in India, so tell me, interest is accrued in India and received in India, it will be your, no need to deem also. But what if the resident has taken the loan from you, use that loan in India, that means not covered under the exception, it is covered under section 9. So even if it is received outside India by you, still it will be covered by section number 9. It will be your deemed to accrue or arise in India. Which income? Indian income. Did you understand this? Hello? So now I am asking you one question. You are an assessee. And look at the chart and then give me the answer. I am telling you. You are an assessee. I have taken a loan from you. I am government. So government is giving you interest. Government is giving you. Tell me. No. Your next question should be where the interest is received. Interest is received in India. No need to deem also. Hello? You are receiving that interest. But you are receiving it from? Then deem it. It will deem to accrue or arise in India, Indian income. Take. If you are ROR, RNOR or NR, in all the cases it will be taxable for you. Hello sir. Now, I am a resident. I am taking a loan from you. I am taking on that loan. If I am giving you interest, your first question should be, where the resident has used the, if the resident has used the loan amount for any business outside India, profession outside India or source of income outside India, then in that case it will not be deemed to accrue or arise in. It is accrued from outside India. Now see where you are receiving it. Are you receiving that interest in India? Yes. No need to deem also. What type of income? Indian income. Take. Yes or no? But what if the resident is giving you that interest which was accrued outside India? You are getting that interest outside India. Accrued outside India. Received outside India. Even if coming from a resident, will be treated as your foreign income because the money was not used in India. It cannot be deemed to accrue or arise in India. It will be accrued outside India. And since you have received also outside India, it will be your foreign income. Part A or Part B? Part B. If you are ROR, then it will be taxable. But if you are RNOR or NR, it will not be taxable for you. Getting my point? Hello, sir. Now, I am a resident. Taken a loan from you. I am not using that loan for any business, profession or source of income outside India. Then definitely your money will be used by this resident in India only, no? If I am not using the loan outside India, then definitely the loan would have been used by this resident in India. And on that loan, if the resident is giving you interest, accrued in India, and if you are receiving that interest in India, then no need to deem also. What type of income? Indian income. Take. Understood? Hello, sir. And what if this resident who is giving you interest has not used the money outside India, who has used the money in India? Hello? He is giving you interest, but you are receiving that interest. But since it is coming from resident, no, it will be deemed to accrue or arise in India since he has not used that money outside India. Getting my point? Deemed to accrue or even if you are receiving, this will be your Indian income. This will be your take. Will you remember this? I have covered all the possibilities in this single discussion which can be asked in the exam. And you are not learning this thing as if I am doing a revision. You are learning this thing as if I am teaching it for the first time and you don't know anything. Getting some value additions? Hello? Were you aware about all these things? Or coming to know many things for the first time? Now, if these things are put in the question, the same thing will come in the question which I am explaining right now. But they will be framing it in the form of sentences, paragraph. You just have to remember today's lecture and identify, oh, sir was giving this type of example only. This type of example only has come in the question. And in that example, what the sir was saying, oh, sir was saying that it is accrued outside India, but since it was received in India, it is Indian income. Sir was saying like that. At that time, these points should, come in your mind. Getting my point? Now tell me, the person who is giving you interest, if he is not government, any other person, so any other person can be a non-resident also, no? Can a non-resident give you interest? Now I am not a resident, I have taken a loan from you. I have taken a loan from you. Now this non-resident has taken a loan. Usually, whenever the non-resident will take a loan, he will usually use that loan outside India only, no? Since he is a, so taking the loan from you, the non-resident might be using that loan outside India only. So why to deem it? Getting my point? But wait, one chance is there. Non-resident has taken a loan from you and used that loan. Any business in India, any profession in India, or any? No. Only business in India, profession in India. Only business in India, or? So, non-resident has taken a loan from you and used the loan where? In India for any business or profession. Business or? In this single case, now you will check. On the loan which was used in India, the non-resident is giving you interest. This interest is received by you in. Will you deem it? Tick. But if it is received, are you receiving it outside India from a non-resident? Even if you are receiving it outside India but the money which you are receiving outside India for the use of your loan in India, how can that be foreign income? Even that has to be your Indian income, even if you have received it outside. Getting my point, sir? So this will be covered by section number 9. Tick. Indian income. Will you remember? Now pay attention. If the loan was used in India for any source of income, see, even if the loan was used in India, but is it used for business or a profession? No, it is used for any other source. Yes or no? Hello, sir. To acquire a land in India, I have taken a loan from you. That loan is used in India, but that loan is not used for any business or profession in India. Getting my point? So I am covered in this point. So if the loan is used in India for any source of income in India, on this loan, if the interest is received by you, if the interest is in India, tell me, what type of income? Indian income. And if it is received, in this case, section number 9 is not applicable. Only in this case. In the next 2 points now, which I am going to discuss, here also section number 9 will be applicable. But in the case of interest, section number 9 is applicable only if the non-resident has taken loan from you and used that loan in India for any business or profession only. Getting my point? Hello, sir. So, non-resident has taken a loan from you. Non-resident has taken and using that loan in India on any business or profession. If that interest on that loan you are getting, no need to deem also, because that interest you have received in India. But on that loan, if you are receiving interest outside India, then even if it is coming from a non-resident, that interest is for use of money in India. It will be deemed to accrue or arise in India. This point, yes or no? Now, if the non-resident has taken a loan from you, non-resident has taken a loan from you, and that loan is used by the non-resident in India on any source other than business or profession. And if that non-resident is giving you interest, are you receiving that interest in India? It has to be your Indian income. No need to deem also. Getting my point? But if that non-resident is giving you interest, you are receiving that interest outside India, then this case will not be covered by section number. This case will not be covered by section number. This will be your foreign income because it is accrued. Sorry, this will not be covered by section number 9. It will be automatically be treated as your Indian income. Why? Because loan was used in India on any source of income in India. So no need to deem only under section 9. It will be automatically be treated as your Indian income. Getting my point? Hello, sir. And even if it is received outside India, since it is not deemed to accrue or arise in India, but it is automatically accrued in India, Indian income, it will be take and take. Will you remember this? Hello, sir. Now, non-resident is giving you interest. Non-resident is giving you on loan. But the loan was used outside India. Loan was used. So, interest is accrued from outside India. In that case, section number 9 will not apply. Section number 9 will be applicable only if the non-resident is using the money in India in any business or profession. Getting my point? But if the non-resident has used the loan outside India, hello sir, if the non-resident has used the loan outside India, then in that case, on that loan, whatever interest will come, that is accrued from outside India. Accrued from. But if you receive that interest in India, it will become your Indian income. But if you receive that interest outside India, so accrued outside India, received outside India, it will become your foreign income. Part A or part B? Tick, cross, cross. Okay. Now to sum up this entire discussion, no, interest coming from government. Now I will not say received in India, received outside India. You know that the moment it is received in India, no need to deem. Hello. So my entire discussion is focused on one thing. It is received outside India. Only if it is received outside India, then only we come under section 9 to deem it, to make it Indian income. Getting my point? So what if outside India only you are receiving interest? Yes or no? Outside India you are receiving interest from government. From deemed to accrue or arise in India. Outside India you are receiving interest from a resident. From a, even that will be deemed to accrue or arise in. Even that will be deemed to accrue or arise in India. But in one case, even if it is coming from resident, it will not be deemed to accrue or arise in India. It is coming on a loan which was used by the resident for business, profession or source of income outside India. If on this loan the resident is giving you interest outside India, then in that case it will not be deemed to accrue or arise in India. It will be your foreign income because accrued outside India and you are receiving also outside India. Getting my point? Then in that case section number 9 will not be applicable. That will not be treated as your Indian income. Getting my point? I am talking only about these points where the income is received outside India. Income is received. All those points I am discussing, outside India and all. Because the moment you will receive the interest in India, there is no point of deeming it. It is automatically becoming your Indian income. Getting my point, sir? Hello, sir? Now pay attention. Now the interest is coming from non-resident. Interest is coming from, usually it is not deemed to accrue or arise in India. But there is one case. There is in which it will be deemed to accrue or arise in India. If the non-resident has given you interest on a loan which he has used, which he has for any business or profession in India, only then it will be deemed to accrue or arise in India. Interest coming from government, come on, fast. Interest coming from, deemed to accrue or, interest coming from government, deemed to accrue or, interest coming from resident, also deemed to accrue or arise in. But there is one exception. There is one. If the resident is giving you interest on a loan which he might have taken from you for any business, profession or source of income outside India, on that loan if the resident is giving you interest, then it will not be deemed to accrue or arise in India. In every other case, whenever you are going to get interest from resident, it will always be deemed to accrue or arise in India. Getting my point? Hello, sir. But now tell me, if the interest is given to you by a non-resident, if the interest is given to you by a, it will not be deemed to accrue or arise in India, usually. But there is only one case where the non-resident will give you interest, that will be deemed to accrue or arise in India. Non-resident has given you interest on a loan which he has taken from you for a business or profession in India. That's it. Section number 9, point number 7 over. Now see, point number 8 and point number 9 will become piece of cake for you. Should I? What was this income? Here, instead of interest, can you get royalty income? Can you get royalty income? Royalty also you can get, no? Who will give you royalty? Who is going to give you royalty? This entire point is not applicable for royalty, huh? Wait. Because there is some change here. In interest, we are saying that even if what? The non-resident is giving you loan which was used where? In India. On any source of income in India other than business or profession. It will not be covered by section number 9. Hello, sir. But for royalty, no, this point will be automatically covered here only. Any business or profession or source of income in India, it can be covered under section 9. Yes or no? Only that difference is there. Here there is no need to deem, because automatically it becomes Indian income. But in the case of royalty, etc., there is a need to deem it also, because it is used for any source, any business or any profession in India. There is a need to deem it. Getting my point? Pay attention. Don't look at this chart. Apply some logic. Okay. Royalty will be given for what? See, interest is given for the use of your money. Interest is given for the use of your, somebody might have taken money from you. He is using your money, and for the use of money, he is paying you some returns in the form of interest. Yes or no? Yes or no? But somebody giving you royalty, why the royalty will be given? That person who is giving you royalty, he might have taken something from you. Your intellectual property rights, patent, copyrights, franchises, trademarks, many things, no? Hello? So the person who might be using your intellectual property, you are the owner of that intellectual property. For example, you are the owner of a patent. Can you give your patent to me for using it? Yes. So now your patent I will use, your copyright etc. I will use, your rights I will use, And for the use of your intellectual property rights, I will give you some returns. And that return which you will get is nothing but royalty. Getting my point? Hello, sir. So now tell me, you are an assessee, huh? You are an. And every time, whenever I am saying it is deemed to accrue or arise in India, always I am saying that you are receiving this income outside India. Because if you receive this royalty income in India, in all the cases, it has to be your Indian income. No need to deem it. Deeming provision will apply only if you are receiving this royalty outside India. If you are receiving this royalty, so are you receiving this royalty outside India? From government. Government might have taken your patents, etc. Government might have taken your rights, and for that the government might give you. Japanese company using technology. Government has taken a technology for running the metro and all from Japanese company. For that, the Japanese company will charge royalty. Who is going to give royalty? Japanese company is going to get the royalty, no? From. So are you getting royalty? Become an assessee. Are you getting royalty outside India? From the always deemed to accrue or arise in. Always deemed to accrue or. If you receive in India, then there is no need to deem also. Got it? Now, can you receive royalty from a resident? Now, non-government people, yes or no? Other than government, are you getting royalty from any person who is a resident? So, whenever you will get royalty outside India from any resident, it is usually deemed to accrue or arise in India. It is usually deemed to accrue or arise in India. One exception. The resident who is paying you royalty for any intellectual property which this resident is using for any business, profession or source of income. On that use, if the resident is giving you royalty, it will not be deemed to accrue or arise in India. It is accrued from outside India. And since you have received outside India, it will become your foreign income. Part A or part B? Part B. Tick, cross, cross. Hello, sir. But what if in any other case, if the resident is giving you royalty, meaning the resident has taken your intellectual property and he is not using that for a business, profession or source of income outside. So definitely he would have used in. So every time whenever you will get royalty from resident, every time whenever you will get royalty from, it will be always deemed to accrue or arise in India. Only one exception. Only resident giving you royalty. Resident giving you for your intellectual property right, which he is using for any business, profession or source of income outside. In that case, that royalty will not be deemed to accrue or arise in India. Will you remember this? Hello, sir. Now, next one. Non-resident is giving you royalty. Non-resident is giving you. Normally, it is not deemed to accrue or arise in India. Normally, it is not deemed to accrue or arise in India. It will be deemed to accrue or arise in India only in one case. Non-resident has taken your intellectual property right to be used for any business in India, profession in India and source of income in India. And for this use, if the non-resident is giving you outside India, then it will be deemed to accrue or arise, even if it is coming from a non-resident. In every other case, royalty received from a non-resident will not be deemed to accrue or arise in India. It will be accrued from outside India only. Getting my point? Understood? Easy, no? Point number 9, if you understand, no? Point number 7, if you understand, point number 8 becomes easy. Now let's go to point number 9. Now I will talk about fees for technical services. Fees for? You are an assessee, huh? In point number 7 also you are an assessee, point number 8 also you are an assessee, and point number 9 which I am going to discuss now, in this point also you are an assessee. Are you an assessee? You are receiving income. What type of income? Fees you are earning. Fees for technical services. Assessee, you are earning FTS. FTS means you are earning fees for technical service. Huh? Very good. Who is giving you? Outside India? Who is giving you? Government. Huh? Section 9. Deemed to accrue or arise in India. Definitely you might have given technical services to government, and for that the government is giving you FTS. Where? Outside India. Deemed to accrue or arise in India. Because your technical services were rendered to government, and for that whatever FTS you are getting, that is your Indian income, deemed to accrue or arise in India, even if you are receiving it outside India. Will you remember this? Hello sir. Next one. If any resident is giving you FTS, can a resident give you FTS? Meaning that you might have given technical services to whom? And for that technical services, the resident is giving you FTS, fees, hello? Always deemed to accrue or arise in India. One exception, only one. Resident has taken your technical services for any business, profession or source of income outside India. And for those technical services which were rendered by you outside India, if the resident for those services giving you FTS, it will not be deemed to accrue or arise in India. And if you are receiving that FTS outside India, it is accrued outside India, received outside India. Even if it is coming from a resident, it will not be treated as your Indian income. It is not going to be deemed to accrue or arise in India. In every other case, if the resident is giving you FTS, it will be deemed to accrue or arise in India if you are earning and receiving that FTS outside India. Got it, sir? Hello? Next one, last one. If you are getting FTS from non-resident, FTS from, then normally it is not deemed to accrue or arise in India because you are getting it from non-resident. But only in one case, it will be deemed to accrue or arise in India. Technical services are taken by the non-resident for any business, profession or source of income in India. And for these technical services, if the non-resident is giving you FTS, even if you are receiving it outside India, it will be deemed to accrue or arise in India. Understood? Sure? 9 points covered. Last point, point number 10. Do you know gift? Gift means it can be sum of money also, and it can be asset also. It can be asset also, it can be sum of money. I'm not talking about asset. I'm talking about sum of money. Money you are getting as a gift. So first you become an assessee. Are you an assessee? Are you an assessee? You are RNOR or NR. You are RNOR or NR. Now the status of assessee is known. In the last 3 points, we were not bothered about the status of the assessee. But in this point, what is the residential status of the assessee? So you are an assessee, your residential status is RNOR or NR. And where are you, you know? You are outside India. You are you RNOR or NR? Where are you? You are sitting outside India. Outside India, you are getting some sum of money without consideration. Who is getting sum of money? Assessee. RNOR or NR. Are you getting sum of money for doing something or without consideration? Without consideration you are getting sum of money. Where? See, if you would have received that sum of money in India, then there is no point of deeming. It is definitely your Indian income. That gift is your Indian gift. Hello? Has to be taxed provided the amount is more than 50,000. Hello? Then there is no point of deeming it if you are receiving that sum of money in India. But are you receiving that sum of money in India? No, no, no. You are receiving that sum of money. And what is your status? Why RNOR or NR? If you would have been ROR, no. So whether you receive gift in India or whether you receive that gift outside India will not make any difference. So hence, you are RNOR or you are NR. Where are you? Outside India. Without consideration, you are getting sum of money outside India only. Even that will be deemed to accrue or arise in India in your hands. If you are receiving that sum of money outside India from any resident, from any, so the person giving you that gift has to be a resident. The person giving you that gift has to be a, see, the person can be ROR also, can be RNOR also. The person giving you gift can be any resident, but he has to be a resident. So a resident is giving you gift outside India. Gift means sum of money without consideration. Only sum of money, only sum of money without consideration. And it is given to you by the resident, and yourself, what is your status? RNOR or NR. So for you, this sum of money will be deemed to accrue or arise in India, even if your status is RNOR or NR, even if you are receiving it outside India. But since you have received it from resident, we have to deem it as your Indian income. Got it, sir? This was your point number 10. These 10 points we have done in the same manner in which I do in my regular batch. Why? Because this is the most important section and this is going to bother you till the end. Till the end, this section number 9 will bother you. In any of the question, no, section number 9, concepts of section number 9 can be exploited by the ICI. So don't leave this section. This is very, 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 very important. Understanding? Today itself, go and solve all the questions at home. You will come to know now all the questions will become more easy for you. Okay? And if you are getting any doubt or any difficulty in any question, I have told you, YouTube, I have uploaded videos. Full questions of ICI, I have uploaded. Go and watch those videos. You will come to know where you are going wrong. Getting my point? Hello, sir. Now, let's end this chapter and now begin the new chapter. What is the name of the new chapter? Income from house property. How many sources of income are there? How many sources of income are there? How many sources of income are there? First time when I asked this question, everyone was giving the answer. Same question asked for the second time, few people kept quiet. Third time, majority of you did not give me the answer. Why? Because the answer everyone gave me, no, was wrong. I am not asking how many heads of income are there. I am asking how many sources of income you can have. N number of sources. I have 4 businesses. Business 1 is also my source of income. Business 2 is also my source of income. Business 3 is also my source of income. And business 4 is also my source of income. I have 4 sources of income, which I will classify under the head PGBP. Can I have 5 capital asset, which I am selling in this year? Capital asset 1, capital asset 2, capital asset 3, capital asset 4, capital asset 5. 5 capital assets. 5 sources of income. One capital asset will give me long-term gain. Second will give me long-term gain. Third will give me short-term loss. Fourth will give me again long-term loss. Fifth will give me short-term gain. Possible? But all the capital assets which are transferred by me in this year are all sources of income. No, all the capital asset which I am transferring is allowing me to earn income. Hello, sir. 5 sources of income. All the 5 sources are capital asset which I am transferring. I have to classify all of them under the head PGBP or capital gains. Capital gains. I am working in some organization as an employee. Employer-employee relationship. Hello. And from that relationship, from my employer as an employee, I am earning some. So I am earning salary income. What is the source of that salary income? That employment. That employer is my source of income. Can I have one employer in this year? Yes. I can have multiple employers also. In this year, I have left one employer and I have joined the other employer, or simultaneously I am working with 2 employers part-time. Hello. So under the head salary, I am having 2 employments, meaning 2 sources of income. All the incomes from both these sources will go under the head salary. 5 capital assets, 4 businesses, 2 employers, 3 properties which I am giving on rent. If you will count, the count is 5. 3 plus 4 plus 5 plus 2 employers. The count is not 5, count is more. Somebody might have 10 businesses. Somebody might have multiple properties. So all these places from where you are earning income, the places from where you are earning income are known as what? Source of income. And if somebody tells you, somebody asks you, how many sources of income you have? You will say 5. Everyone will have 5 sources of income. Somebody can have 2 or 3 sources of income. Somebody can have 10 sources of income. Somebody will have only 1 source of income. Just imagine about Mr. Ambani. How many sources of income Mr. Ambani will have? Multiple, no? So the sources of income can be n in number. The sources of income can be n in number, but all those sources which are giving you taxable income and which are covered in your scope. All those sources which are giving you taxable income which is covered in your scope will now be classified under 5 heads. How many heads? Which is the first head? Few sources will go to salary. Hello? Which is the second head? House property. Few sources will go to house property. Which is the next head? PGBP. Few sources will be classified under PGBP. Hello, sir. Which is the next head? Capital gain. Few sources will go to capital gain. Next one. All the remaining sources of income which could not be classified under the earlier 4 heads will all go to IFOs. Okay, no? Hello? So, tell me. First head. Salary. Second, house property. Third, PGBP. Fourth, capital gain. And the last one is income from other sources. Now see, you are having some sources of income. You are having some. Those sources are giving you income. Those sources are giving you. And now you have to check. From this source, I am earning this income. From this source, I am earning this income. First question should be whether this income is exempt or not. Whether this income is. If the income is exempt, forget about that source also. Forget about that income also. The source which is giving you income, and as per the Income Tax Act, this income is exempt. What will you do with this source? Nothing. Forget the source also and forget the income also, because that income of that source is not taxable under the Income Tax Act. Section 10 would have given you exemption. Hello, sir. So now 10 sources are there. How many sources? Out of 10, 2 sources are giving you income which is exempt. Which is? How many remaining sources are there? 8 sources of income. 8 giving you income. Giving you. Now these incomes are, these sources and their incomes are not exempt. They are taxable. They are taxable. Now what is your residential status? And what is the nature of these incomes? Based on your residential status and the nature of these 8 incomes, now it will be decided that out of these 8 taxable incomes, out of the 8 sources giving you taxable incomes, how many incomes will be considered under these 5 heads to calculate your total income? Hello, sir. Hello, sir. So how many sources you had? Come on. S1, S2, 3, 4, S5, S6, S7, S8, S9, S10. I'm not writing the coach number of Indian Railways. These are all sources. Source of income. Giving me income. All the sources will give me income. Now if I see, these 2 sources are giving me incomes. But this income is what? This income is also. Now tell me, if the government does not want to charge these incomes under the Income Tax Act, will I take these incomes in the computation of my total income under any of the heads? I don't have to show this under any of the heads. So these 2 will be ignored. Now tell me, these 8 sources are giving me incomes. Taxable income. All are taxable incomes. Will all the taxable incomes be covered to calculate my total income under 5 heads? Depends on the nature of income. Hello. Indian income, foreign income. Indian income, foreign income. And my residential status. For example, my residential status is RN. My residential status is RNOR, earning this income, this and this. All these incomes are earned by RNOR. Getting my point? Now out of all these incomes, this income is Indian income, taxable for RNOR. I will be taking this under any of the 5 heads. In the computation of my total income, this income will come. Hello, sir. Next one. This income, is a foreign income. This income is, but part A foreign income. For RNOR, part A foreign income will be taxable in India. So while calculating my total income, I will have to include. Getting my point? Next one. Source 5 giving me Indian income. This is also giving me. Sir, this source number 8 is giving me foreign income. Part B. For RNOR, this source is giving foreign income. Part B. Will be included in the computation or will not be included? Cross. Getting my point? This is also giving Indian income, but this is not giving Indian income. This is foreign income, part B. Now see, 2 are exempt. I'm not going to take them. But can you see, 8 were taxable? 8 were taxable incomes. But out of all the 8 taxable incomes, am I taking all the 8 taxable income in the computation of my total income? Depending on the nature of income and my residential status, I am deciding that which income will come in the computation of my total income and which income will not come. Getting my point? Hello. So I decided that this income will also not come, this income will also not come. Hello, sir. Interest from bank accounts situated outside India. Where is my bank account? On that I am earning interest, and it is received also. This source number 8, sir, source number 8, this source, what is this source? This is a bank account which is outside India. This bank account is giving me what? Interest, and this interest is also received. So this bank account is a source giving me interest income, and that interest income is received. Should I take this income to calculate my total income? Why? Because my status is RNOR. For RNOR, such type of incomes not to be considered to compute the taxable income. Forget it. Don't take this in the computation of your total income. Hello, sir. Next one. This, no? This. Salary. I am having employment outside India. I am rendering services also outside India. Rendering services outside India. Rendering services outside India. For rendering services outside India, I am earning salary. And that salary is also received. And by the way, I am not an Indian citizen receiving that salary from government. So it is not deemed to accrue or arise in India. What type of income? Foreign income. Part A or Part B? Part B. Foreign income. Taxable for RNO or not taxable? So these two incomes I will not take. Now, this is my house property in India, giving me rental income. House property in giving me what type of income it is? Indian income. Whether my status is ROR, RNOR, any status, I have to charge this income under any of these. What head? Getting my point? So now I will identify that this source is my house property, this is my business, this is my capital asset, this is again my house property, this is my bank account in India. Likewise, all the sources will be there. Yes or no? Now, I will take only the taxable sources. I will take only and those taxable sources which are covered in my scope, which are covered in my. Now, what I will do? One by one, I will ask them, who are you? Who are you? And I will try to classify them under 5 heads. Now, out of this, which income will come to salary? Out of this, which income will come to PGBP? Out of this, which income will come to capital gain, other sources and something like that? Getting my point? Very first section of every head, known as charging section. Charging section. Section 15, section 22, section 28, then section 45, and then section 56. Every head, the first section of that head will be charging section. Now, if any of these sources has satisfied this charging section, hello, then that source and the income of that source will be classified under the head house property. Now, any of these sources and the income has satisfied the conditions of section 45. Hello? That source and the income of that source will be classified under capital gains. Now, after taking that income, after classifying that income under a particular head, few deductions are given under that head. take those deduction out of these incomes, you will be able to calculate head-wise incomes. Once you are done with the heads, do the total of the heads. Do the total of the heads. Hello. Apply clubbing and set off. What you will get? Gross total income. And then chapter 6A deductions, you will get total income. Getting my point? So now we learn that out of the taxable sources which are covered in your scope, depending on the nature of income and residential status, out of the taxable sources, which source will go to which head? And by taking that income under that head, how to calculate the income of that particular head? Got it, sir? So the first head is salary. That we are going to do second. Okay, no? We are going to start with house property. So your house property head, your income from house property head. This head is from section number 22 to section number 27. 22 to 27. What is the first section under the house property head? What is the first section? 22. That is charging section. Charging section will tell you which source of income will come under this head, and the income of that source, what income of that source of income will be charged under this head. Yes or no? That is section number 22. Section number, now please listen to me very carefully. Section number 22 says that annual value. What did I say? Of any building. Annual, annual value of any building or land appurtenant to such building, of which the assessee is the owner and not used by him for his own business or profession. Section 22 says, under this head, what will be charged? What will be charged? Annual value. Annual value of any building or land appurtenant to such building. We call this house property. We call it, of which the assessee is the, and which is not used by the assessee, not used by the assessee for his own business or profession. Go and identify any building or land appurtenant to building. Yes, sir. This is a building or a land appurtenant to building. Sir, this is also a building or land appurtenant to building. Sir, this is also a building or a land appurtenant to building. And sir, this is also a building or land appurtenant to building. Building or land appurtenant to building. Building or a land appurtenant to building. Building or meaning these are house properties. These are, and I am the owner, I am the owner, I am the owner, I am the owner. Hello? I am the owner of this house property. House properties is there. I am the owner of these house properties. I am not using for my own business or profession. All this will come to 4 house properties I have brought under the head house property. Only these properties you will bring under the head. And after bringing these properties under the head house property, their annual value as per section 23 will be determined. And that annual value will be charged under the head house property. For every property which you are bringing under the head house property, calculate the annual value. What you will do? But for example, tell me, I am having this house property, this house property, this house property, this, all are house properties, okay, no? 4 house properties I am having. How many house properties? I am the owner, I am the owner, I am the owner. I am not the owner. So even if I am having these 4 sources of income, all these sources are house properties. Hello? But I am the owner of this property, owner of this property, owner of this property, but I am not the owner of this property. So even if it is a house property, but am I the owner of this house property? I cannot bring this source of income under the head. Now out of 4, only 3 house properties can come under the head. Because these 3 properties are house properties of which I am the owner and not used by me for my own business or profession. House property, I am the owner and not used for my own business or profession. Getting my point? Only then it will come to house property. Sir, house property not used in my business cannot come to house property head because you are not the owner of that house property. You have to be the owner of that property. Ayyo, understanding? Sir. Owner, sorry, house property, owner, not using for own business or profession. We'll go to house property head. Hello, sir. Owner, sorry, house property, owner, I am using it for my own business or profession. Third condition, I cannot take this property to. Getting my point? Third one, house property, I am the owner, not using for my own business or profession. I can take this property also. Now out of 4, how many remains? Only 2 can come to house property head. Because 2 house properties of which I am the owner, which are not used by me for my own business or profession, I will classify under the head. What about the other 2 properties? Sir, they are house properties. But for one property, you are not the owner, no? Don't bring that property under the head. What is to be done with that property, we'll see. Don't worry. Okay, no? If you are not the owner of a house property, you cannot bring that property under the head house property. Sir, but for this property I was owner, no? But you are using that property for your own business or profession. That property also you cannot bring under the head. Understanding? 3 conditions. There has to be a house property. There has to be a, number 2, the assessee has to be the owner of the house property. Hello? Number 3, the house property of which the assessee is the owner shall not be used by the assessee for his own business or profession. Now during the previous year, no, you have to check how many such properties you are owning. Hello? Of which you are the owner and not using for your own business or profession. Bring all those properties under the head house property. Now, once you will bring these properties under the head house property, then you will have to calculate the, because section 22 says that when you will bring this house property under this head, the rental income of that house property will not be charged. The rent earning capacity of that property will be charged, which is known as annual value. How much actually you are earning from that property will not be taxable. How much you can earn from that property, how much is the rent earning capacity of that property, that will be charged to tax. Getting my point? And that rent earning capacity is known as annual value. How to calculate? Very simple. Very, very, very simple. That will do. Don't worry. So in section number 23, now these properties which you have classified here, no, will be of different types of properties. If this property is let out, if this property is self-occupied, if this property is partly let out, partly self-occupied, hello, if this property is deemed to be let out. So in the case of such properties of which you are the owner and not used for your business, but now classify that into different types, because for different types of properties the annual value calculation is different. For let out property the annual value calculation is different. For self-occupied property the annual value calculation is different. Partly let out, partly self-occupied, different. DLOP, different. Getting my point, everyone? So tell me one thing. Section number 22, did you understand? First one, what will be taxable? What will be taxable under this head? Annual value will be taxable. Annual value of? We are calling it house property, of which the assessee is the owner, of which the assessee is the, and which is not used by the assessee for his own business or profession. Bring all those properties under house property. Tell me, how many such properties you can have? How many such properties you can have during the previous year? Any number of properties. Can you have 5 properties of which you are the owner and not using in your own business or profession? Yes, bring all the 5 properties under this head. Bring all the 5 properties. Can you have 10 properties of which you are the owner, hello, and not using for your own business or profession? Yes, bring all the 10 properties under this head. Now, for each property which you have brought under this head, for every property which you have classified under this head, you will calculate the annual value. You will calculate the, as per section. But what annual value, will it be taxable, how it will be calculated, depends on the type of property which is there in this head now. Yes or no? Some property will be LOP, some property will be DLOP, some property will be SOP and all. So now the properties which you have classified here under this head, now you have to identify the type of the property also. First bring that property under this head, and after bringing this property under this head, identify the type of the property. See, 10 properties you have brought under this head. Out of these 10 properties, 3 properties are self-occupied. 3 properties are for your residential use. 3 properties are self-occupied for residential use. So 3 properties, nature, type of these 3 properties is SOP. Property 1, property 2, property 3. They are SOPs. First identify the type of property. Then 7 properties remaining. Out of 7 properties, no, out of 7 properties, all the 7 properties are let out. All the 7 properties are. So what is the type of these 7 properties? LOP, 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 LOP. Hello, sir. Now, section 23. Section, subsection 1, subsection 2, subsection 3. It is 4 and there is 5 also. 5 different types of property. Identify that this property falls under which subsection. Getting my point? Now, for example, here LOP is given. Here SOP is given. 23.3 partly LOP and partly SOP based on time. Based on this 4th point is DLOP and the 5th one is property held as stock in trade. Okay, no? Now ask yourself, identify the property. That okay, this is the property of which I am the owner, not using for my own business or profession. This property falls under which subsection? Few properties will be LOP, few properties will be SOP, few properties will be partly let out, partly self-occupied based on time. Few will be DLOP, few will be. Getting my point, sir? So now, for LOP, they are saying that the annual value will be taxable. So for every LOP, how to calculate the annual value? It is given in section 23(1). And identify or calculate the annual value as per section 23(1). And it will be taxable. It will be taxable under the head house property. Yes or no? Now next one. SOP can be there. SOP can be there. Few properties of which I am the owner, not using for my own business or profession. If I am not deriving any financial or economic benefit from the property, then that property can be SOP. But the only condition, I am not earning, I am not exploiting the rent earning capacity of that property to earn something, then that property can be SOP. 3 types of properties you have to remember. How many types? 3 types. If any of these properties you see, no, you can call that property as SOP. You can call that property as throughout the previous year. What did I say? Used by the assessee himself or his family members for residential purpose. Even if the property can earn rent, but it is not earning any rental income, its exploitation of rent capacity is not happening. Why? Because it is being used by the assessee himself or his family members for residential purpose. Got it, sir? Hello, sir? So, how many such properties? Throughout the previous year. What did I say? Throughout the previous year, if the property is used for residential purposes by assessee himself or any of his family members, then that property you can call as SOP. This is SOP. You can say that okay, this type of property is SOP. Type of the property is SOP. Yes or no? First. Second, throughout the year, throughout the property remains vacant, reserved. I want to have this property with myself, that whenever I want, I can use that property for my residential purposes. I am reserving that property for myself. It is under lock and key. It is under, whenever I want, I can use that property for my benefit, my residential use. Sometimes what happens, no, I have one property in Bangalore. Just an example I am giving you for understanding. I don't have actually any property in Bangalore. For your understanding, I am telling you. I have a property in Bangalore. So whenever whenever there is a lot of heat or summer season is there, no, in Gujarat it is very hot. Okay, in summer season, no, I don't like. I have one bungalow or I have one property in that time, in summer time, I will come there. Otherwise, it is completely locked. I have reserved that property for myself. Hello? And throughout the year, if I am keeping that property reserved for myself, so even if I am not using it throughout the year I am keeping it reserved also, not earning any economic benefit, then also it is SOP. Self-occupied property. It can earn rent. But am I exploiting the rent earning capacity? Am I earning any rent from that property? No. So it can also be treated as SOP. Second type of property, did you understand? Hello? Now third. Some part of the year, it was self-occupied. I was staying in that property. For the first 8 months, I stayed in the property. And all of a sudden, I got a job in Mumbai. I got a job in. So from Chennai, I am shifting to Mumbai. I will take all my belongings with me. Hello? But can I take my house with me? Or it will remain here only? My Chennai house will now be empty. Because I am shifting for my business, for my profession, for my employment. I am shifting to some other city, some other place. And as a reason of that, because of that reason, the property could be self-occupied only for 8 months, could not be occupied throughout the year. It was occupied for 8 months, and for the remaining 4 months, no, I had to keep it under lock and key. Did I take any economic benefit? Hello? Then this type of property can also be treated as SOP. Hello, sir. SOPs as per section 23(2). As per section, SOPs can earn rent. But are you earning the rental income from that property? Even though that property has a rent earning capacity, which you can exploit. But you are not exploiting that because you are using it for your residence. Or you are keeping it reserved. Or part of the year you are using and part of the year you are keeping it idle. So since the rent earning capacity of the property itself is not exploited to earn the rental income, why to charge that rent earning capacity under this head? Exempt. What did I say? Exempt. Sir, if I have one SOP, can I exempt the annual value of the one SOP? Yes. Sir, if I have 2 SOPs, exempt the rent earning capacity of 2 SOPs, no problem. Sir, what if I have 3 SOPs? Bloody, now all the properties you will make SOP. Now you came to know, na, that government becomes very kind. If I call my property as what? SOP, so government will give me exemption. The rent earning capacity will not be taxed. Now you will try to call all your properties as what? Even those properties also you will try to call as SOP, which you have actually let out. Now you will try to hide your income. Even if the property is let out, you will not do any rent agreement. And all the rent you will take in cash, etc. Getting my point? And you will tell the government, SOP. See, I am not earning any income. Even if you are earning the income, you will try to hide. See, the intention of the government is very pure. That if the rent earning capacity of the property is not exploited to earn rental income, take the exemption. No, we are going to give you exemption. But giving this exemption without any control will lead to tax evasion. Even those properties which are actually let out, people will start calling those properties also as SOP. Getting my point? So there has to be some restriction. Only 2 SOPs. Only. Which 2 SOPs? Out of 3 properties, which 2 SOPs? Any 2 SOPs of your choice. You are an assessee, no? Out of 3 SOPs, choose on your own. Which 2 SOPs you want exemption? Which 2 SOPs annual value you don't want to pay tax on? Choose on your own. So definitely the third one which will remain. The third one which will. It may or may not be actually given on rent. Maybe you are hiding something, or maybe you are not actually hiding something. But still, that third property we will not consider as SOP. It will be treated as deemed to be let out, and its annual value will be calculated and it will be taxable. Understanding? Hello, sir. Now tell me, out of 3 SOPs, which SOP's annual value you will claim as exempt? The properties whose annual values are higher, rent earning capacities are higher. Definitely we are going to take the exemption for those properties, no? And the third property having the lowest annual value, we will show that property as DLOP. Now maybe you might have given that property on rent and you are not offering that rent for taxability. Now see, that property is treated as DLOP. Its rent earning capacity will be calculated and it will be taxable. So that the rent which you are trying to hide from us, no, even that gets taxed. Getting my point? Or if you have not actually given that property on rent, if you have not actually given that property on rent, so you are a fool. If that property can give you rental income, exploit the property to earn the rental income, no. And if you will not exploit that property to earn the rental income, you are wasting the rental income of the property, you are holding the property with you, thereby increasing the demand in the market. There is a less supply because of people like you. People are demanding. There is a requirement of the property in the market. Unnecessarily the rent and etc. is growing. And you are holding the property, you are not giving on rent. If you start charging tax on that, no, what will happen? You will not feel good. See, I am not earning this rent earning capacity. Still the government is saying that pay tax on this rent earning capacity. Not earning and paying tax, it is better. Give the property on rent, on that rental income and pay tax on that. Now you will release the property in the market. Supply will increase. Unnecessary the rent which is going to increase, no, that will be in control. Got it? No? Hello sir. So tell me, first type of property? These properties are there. Hello, these properties are there. Property of which you are the owner and not using for your own business, or all these properties will be classified as LOP, SOP or DLOP. LOP, SOP or DLOP. Few properties actually let out. Few properties. So they are let out properties. They are let out properties. Are you earning the rent earning? Are you exploiting the rent earning capacity of that property to earn rental income? Yes. Then the rent earning capacity of this property which you are earning in the form of income has to be taxable. All the let out properties, all the rent earning capacity is taxable. Their annual value is taxable. Now the properties having the rent earning capacity which you cannot exploit because you are using that property as SOP. Will not charge the rent earning capacity of that property as a taxable under this head. We will exempt. But this will happen for maximum 2 SOPs. Maximum? Which 2 SOPs? Option 2 assessee. Option 2 assessee will decide that which 2 properties he will claim as SOP and the annual value he will claim as exempt. If he is having only 1 SOP, only annual value will be exempt. If he is having 2 SOPs, then annual value of both the SOPs will be exempt. But if he is having more than 2 SOPs, then any 2 at the option of the assessee will be exempt for him, and the remaining SOPs which he was not claiming exempt as per 23(2) will now be treated as DLOP under section 23(4). Getting my point? Now the annual value of this property will also be taxable. Annual value of this property will also be, it has to be computed in the same manner in which the annual value of LOP is calculated. This is actually let out. This is deemed let out. Hello sir. So the manner in which the annual value of deemed to be let out property is calculated, in that same manner the annual value of the deemed to be let out property will be computed. Meaning the calculation remains same. If you know LOP, DLOP is a piece of cake, it will be very easy for you. And for SOP, bloody why are you calculating also? If you will calculate, at the end of the day, the annual value calculation will be of no use because it is going to be exempt only. For 2 SOPs, no need to calculate the annual value also. Directly take nil. Getting my point? Hello, sir. Now, can there be a property partly let out, partly self-occupied based on time? Partly let out and partly self-occupied based on meaning, sir, during the previous year 24-25, for first 9 months, the property was let out by you. And for the remaining 3 months, what happened? You self-occupied the property. Possible or not? So during some time in the previous year, the property is LOP. During that same previous year, for some time, the property is SOP. So part of the year, property is let out. Part of the year, the property is self-occupied. Partly let out, partly self-occupied based on time. For some time it is let out and for some time it is self-occupied. What will you do with this property? One property or a part of property will always have only one status. A property or the part of property during 1 year cannot have multiple status. It can have only one status. Either the property has to be treated as LOP, or the property has to be treated as SOP, or the property will be treated as DLOP. Multiple status during the same year for a single property cannot be given. Now, if you will say that this property, sir, treat this property as LOP also as well as SOP also during this year, not possible. You'll have to give only one status. What status you will give? Have you given the property on rent? Part of the year, have you given the property on rent? Have you exploited the rent earning capacity of the property? The moment you do it, no, you cannot call the property as SOP. Because only 3 types of properties can be treated as SOP. I've already told you. Throughout the year, used for residence. My property was used throughout the year or only 3 months. Hello? Throughout the year, property kept reserved. Is this property kept reserved throughout the year? So, second category is also not there. Sir, part of the year, SOP, and the balance part of the year, no rent was earned. It was kept under lock and key. I had to keep the property vacant. I had to keep the property idle because I was shifting to some other place for my employment, for my business, for my profession. This is also not happening. Part of the year you are self-occupying, but other part you are earning the rental income, no? So you cannot call this property as SOP. Only single status. LOP. So as per 23(3), what did I say? As per 23(3), this property which is partly let out, partly self-occupied based on will have only one status. This will also be treated as LOP and its annual value will be taxable and its annual value will be calculated in the same manner given in 23(1). Because for LOP, the calculations cannot be different. And if we are considering this property also as what? LOP. So we already know under section 23(1) how to calculate the annual value of LOP. Hello? That same method we are supposed to apply here also. Getting my point? Hello? And the last one held as stock in trade. This discussion and the discussion of one more type of property I'm going to do tomorrow. Tomorrow we'll end this chapter. Okay. 1 or 2 questions which are typical question. I'll try to touch those questions also. Don't worry. Okay. But from tomorrow onwards, start carrying your ICI study mat. What will you carry? ICI study mat. Please carry, huh? Because from tomorrow onwards, from ICI study mat, I'll be touching few questions. Okay? See you tomorrow. Bye-bye. Say bye. Bye.